How you doing, my friend?
Sorry, I got a little excited there. I'm great. How are you?
I'm doing okay. Welcome to Winnipeg.
Welcome to Winnipeg. What a glorious city you have here.
Thank you. I built it myself.
Did you?
No,
No.
but this is my pride and joy. We have no topic. We just thought we would kind of figure it out along the way.
Everything good works out like that, by the way.
Something I did want to bring up that you we went out for lunch before this. You're visiting my fair city for a little bit, so this is the first time us meeting face to face, which is cool. After being very good X.com creators,
Mutuals.
this still sounds like an OnlyFans type situation. X.com.
Should I take my shirt off?
No. But so we went out for lunch before this. And you said something while we were talking that I kind of noted in my head because I'm like, that actually is interesting. Because you asked me why I decided to acquire more businesses rather than just like investing money in, in the stock market or whatever. So I thought that's an interesting kind of line of thinking because like you are a relatively accomplished, famously dividend investor.
My mom thinks I'm cool.
Okay. But like, so for instance, how much of your portfolio is in, relatively safe, conservative, dividend paying companies?
In terms of my, my investments and then, like the other part of my net worth, which is real estate, cars, etc. So
Yeah.
just talking about investments, what I
I guess
invest
like
in,
income in producing assets.
100%.
Yeah. So why? Now, obviously, like running a business isn't for everybody. I don't wish the stuff that I do on a daily basis. I don't wish that on anybody. But there's surely you've had some opportunity over the years to invest in whether it be venture capital or something like that in more kind of stuff with better upside. So why doesn't that appeal to you? Why does it only appeal to you for this kind of more traditional, let's say, approach?
Sure. So basically, what happened was I started with the end game in mind, and it's like, what do I want my life to look like when it's time for me to stop working, time for me to retire? And it was a income stream that kind of grew with inflation, that was very safe, that I could just basically not work anymore and not have to worry about the ability to keep busy or anything like that. That's what I wanted. And so from there, then I worked backwards and I said, okay, like, because I want that, how do I make that happen? And that's how I basically went from being a deep value investor to a dividend investor.
Okay. Because like I'm all like in the dividend versus growth argument, I'm pro dividend for the most part. I always thought of it as like I can frame it in a bunch of different ways, but if you frame it as like a real estate investment, why would I want to sell my house to make money when I could, rent out the house if you have the same, if it's this, let's say it's the same level of difficulty to do both. I also never liked the idea of selling off parts of your portfolio I think that's my biggest contention is like, I'm hyperbolic about it all the time on Twitter just to like get people
Of course.
to think about it. But I always say like, we used to think in empires, we used to think in multiple generations, and now you just sell off 4% of your portfolio until you're broke and then you have nothing to pass down. But you could, estate tax notwithstanding, you can pass down a dividend portfolio that pays dividends to the next generation. And then in theory, they could add to it and then you could just keep, building like that. So even if it's not a family business in quotations, it's still kind of like a family dividend portfolio. Something like, and like I'm not even convinced I want to have kids in my life, but something like that appeals to me a lot more than selling off assets. Like imagine I sell off part of my small businesses to pay bills every month. That never vibed with my investing mentality.
That's exactly it. And that's a really good point because, like take away I think there's a lot of kind of galaxy brain nonsense, I'm going to call it, in terms of the stock market where, whether it's like trying to get attention on X or blogs or newsletters or whatever, whether it's people trying to prove that they're smarter than everyone else. I'm not really exactly sure what it is, but there's I feel a lot of people overcomplicate this shit a lot. And, just like kind of pulling back from the whole thing, like we own parts of businesses. You have actively managed businesses. I have a lot of passively managed business. But at the end of the day, it's the same thing.
Yeah.
We just have different management,
Yeah.
commitments.
Yeah.
So why is it that, I say I just insist on being paid a portion of the profits every year.
Yeah.
That's what I want.
Yeah.
Like, what's controversial about that? What's like I don't understand how I've gone from I want to be paid a portion of the profits that my these underlying businesses generate, and why there's this gigantic debate around it.
I guess like what's the counter argument is that growth outperforms dividends.
Well, dividend growth stocks have outperformed the S&P 500
Yeah.
for close to 100 years.
Yeah.
Except this last 10 year.
Which yeah, like this whole tech boom that we're in. I'm not convinced this is sustainable by any means of the conversation, but I guess like the argument, if I could play devil's advocate, is that Google, maybe Google's a bad example, but like a company can make more money off of your dividends than you can. Like they're more like them reinvesting your dividends instead of paying them to you can lead to growing faster. I think that's like the counter argument to dividend investing.
Sure. So I think the one thing I would caution everyone listening and watching this is that you look at something like a Microsoft or a Google or a Facebook, Meta, whatever it's called now, the performance that these stocks have had over the last 10, 15 years. But when you look at the multiple that you paid for these stocks, Microsoft was going for 10 times earnings like in 2012, 2013. Now it's 30 times earnings.
Yeah.
And that has been a big reason for the outperformance. If you take away that multiple expansion and you just look at earnings growth, the earnings growth has been there as well.
Yeah.
But if you take away that multiple expansion, all of a sudden that outperformance really almost entirely goes away.
Yeah.
So can you count on these stocks going from 30 times earnings up to 50 times earnings? Maybe. It's hard to predict what a multiple will be 10 years from now. But it's just we have to acknowledge how much tech return has been driven by multiple expansion.
Yeah. Well, and I guess a lot of like the argument that like, oh, they know how to spend the dividend money better to make you more money kind of also gets thrown out the window when like Apple is sitting on $1 trillion of cash, right? Like they're obviously not reinvesting and making more money than you because they're just sitting on it.
Exactly.
And we're at a like, I think all the Mag 7, maybe Tesla notwithstanding, is sitting on record cash, like hundreds of billions of dollars that is just being unproductive, sitting in treasury bills.
So, and part of that is because they have to repatriate that back to the United States and pay taxes on that.
Sure.
So that's an issue there. But you're right. Like you've got these massive cash positions that is just sitting in whatever local currency, making like 3-4%. And I think that indicates that the reinvestment opportunities are not as great as what some people think that they are.
I think, yeah, I think that's a good way to put it. Because like I think like maybe you could make that argument 10 years ago, but I think after the kind of run that we've had with U.S. tech in the last 3 years, even 5 years, that was what they've been talking about, where it's like that Google can spend your money better to expand. And I think a lot of, if you look at the Mag 7 in 2025, they're lagging. Like they're not performing how they where it was the exact opposite, the previous couple of years, where if you took out the Mag 7, the rest of the S&P 500 was flat, even though they were up 40%. But now it's like the last little bit, we're kind of seeing tech wane.
So not only that, but tech is, you talk about the cash, you talk about how profitable these businesses are. I'm the first to admit they're extremely profitable. These guys can afford to pay much higher dividends, and they choose not to. They choose to just keep that cash on the balance sheet, where like the whole appeal of these is that they're capital light. You don't need a huge amount of capital to sell more versions of Microsoft Office or whatever. So if that's the case, then why not return more cash to shareholders?
Yeah.
Why not do that? And I think the the answer is because they just basically don't need to. The stock
Yeah.
keeps going up and up and up, and it's fine.
Because
Nobody cares
I always
because
look,
they keep going up.
I always look through it at a lens as like, because I own 3 different small businesses.
Mm-hmm.
And there's 2 things I can do with my leftover cash at the end of the month, and it's pay myself or reinvest it. And I, 99% of the time reinvest it. But the fact that they're picking a third option, which is just hold it, doesn't make any sense in my operator mind, because it's like, well, now that cash is unproductive. Like,
Exactly.
I can give it to myself and and then I'll invest it or spend it or whatever, or I can use it to grow the business. But if you're not using it to grow the business, I don't even know why that cash exists. So I don't know.
Yeah, and then it's like, so a guy like me shows up and it says, hey, I want a portion of that cash in my pocket every quarter,
And you're the idiot.
and I'm like just treated like I'm a moron, and it's
Yeah,
like,
yeah.
well, like the cash is there, why not give it to the shareholders?
Yeah.
I heard a theory once that it was these companies are getting sort of that fine line of being monopolies and drawing the attention of regulators, and it has kind of happened in terms of Europe. European regulators are starting to go after the
Even here,
big tech companies,
Google and Meta, and they're all going through some trouble.
So
right now.
the theory was that if you basically just stack cash and you just sort of pretend like there's not really, that they're not fantastic businesses that can return all this cash and etc., then you hopefully stay out of the regulators' crosshairs for a little while longer.
Yeah, but that's not a sustainable. You can only avoid it for so long.
Well,
right?
and I mean, like, how stupid are
Do
the
you think
regulators in
yeah.
that scenario, right? It's
Yeah.
like, Microsoft has, 100 billion in cash versus 50 billion in cash. We better not go after them. Like,
Yeah.
it's just a silly argument. I've always thought.
Well, I think it always boils back to a lot of people that I talk to don't really think of buying a stock as buying part of a business.
Mm-hmm.
Like, I think you had a great way earlier of saying, like, I want to, the businesses, like we both own parts of the companies and we both want the companies to pay back to us, but we just, I operate them. We have different management styles.
Mm-hmm.
But I think a lot of people just kind of like see the stocks as just,
Pieces of paper.
It's something to get rich, like you can sell for a profit and
Exactly.
you don't actually,
Yeah.
So, and that's a wider issue, but I guess, like, is there any situation where someone could approach you and be like, I got this investment opportunity where
I'm already out.
yeah.
No, I know what you're saying. And I'm okay with buying something that has a very small dividend.
Yeah.
But for me, it's just like, this is what I do. And if I miss out on something because it's outside of what I do,
Yeah.
fine.
Yeah.
Like, and I could miss out on the greatest opportunity in the world, and it's not that big of a deal for me because there are a million good opportunities out there that, do fall in my wheelhouse that I'm just fine with it.
Because I've heard you talk about like mid and small cap businesses that you own as well. Like Weird Granite Company or something comes to mind. If every so often I'll read your newsletter and then be like, oh, I should buy those companies because Nelson's smarter than I am. But like that doesn't. It's not that part of the business that scares you. It's like the volatility from being like a small cap business necessarily.
Well, the interesting part about small cap, but you look at the like the Russell 2000 in the U.S. There's a lot of trash in that,
of course.
index. And it's the TSX Venture we have in Canada, and it's the same thing where it's like there's a lot of Canada's got a lot of oil companies, a lot of mining companies that are
They go public to raise money to possibly find a mine that'll work, and then a lot of times it's dry or whatever,
or it's just they exist in this sort of purgatory for years to give management a job. But so one is that sort of the whole index, the index as a whole has a lot of trash in it. So immediately you can just, it's like, I'm not interested in a gold company that's pre-production. I'm not interested in an oil company that has one well somewhere, produces 200 barrels a day. Like I'm not interested in any of that. So immediately you can take away a big chunk of the universe, small microcap universe immediately.
Yeah.
And then you sort of look at the like kind of this next generation tech company where it's kind of the same thing where you're swinging for the fences and chances are you're going to strike out, and then you avoid all those, and it becomes not really that big of a universe at the end of the day. Now, I'm attracted to small caps because there's valuation. Typically, they're cheaper than they have potential to be acquired by larger players, and there's potential for multiple expansion for when it's like it's a small cap, nobody likes it, and then all of a sudden it's like, hey, wait a minute, like I'm going to talk about a company called GameHost. They own casinos in Alberta, and GameHost is this easy, boring company. It owns 3 casinos, like 3 hotels, I think, and a little bit of other real estate, and that's it. So what it becomes a proxy on oil. So when oil goes up, GameHost shares
because Albertans are gambling more.
Because Albertans, they go to the oil patch and then they make their money and then they go gamble it away and repeat the process. And so a company like that offers you the upside on oil, and it offers upside on if they can execute, but it gives you a lot lower downside, because it's like, even if oil is struggling, you're still going to get a certain amount of people that are going to go gamble, because that's what people do. So that's what I like about it, is it's like sort of this interesting, unique way to play something that should work out better than just playing the commodity directly.
Because I think, like, you're probably like me as well. Like, I have a really good friend that likes to invest in companies. Like, his whole strategy over the last 5 years, which isn't working as well this year, I'll grant you, was to find companies with like high growth but still have negative PEs, and then buying like 3-year dated leaps, waiting until they flip positive and then selling, basically. And then he was making 100% a year basically doing that for the last few years, and unprecedented bull run helped with that. But he was the one that introduced me to like Rocket Lab, for instance, and he was in at like 250, and I think I put the price on screen right now, but I think it's about $20 USD right now, and he has like $3 calls that are expiring in like 2026 that are just like 1,000% gains and stuff like that. So that's what he was doing, like a lot of like biotech and space exploration and like these kind of like cutting edge companies that like maybe they'll make money, maybe they won't, and then buying them at like a whatever it was, negative 10p, and then selling when they get to like 1, because as soon as they announce on an earnings call, oh, we're profitable now, all of a sudden then it's like stock shoots up. But like, I personally, investing in a company that doesn't make any profit is like outside of my risk tolerance, I think, basically. Yeah,
and like that's the thing, in a bull market, that strategy works, and it works really well. In a bear market, it can come back and it can bite you, and then all of a sudden a lot of your gains can evaporate, because those stocks are, it's like, not only do you lose when the market goes down, of course, but they're much more volatile than the underlying market. And so, the volatility that helps you going up is your enemy when it goes down.
Yeah, for sure. Because like my entire like stock investing strategy ethos has been carved by my operating small businesses. And like, with my startup, we didn't have, if we had a month we didn't make profit, we were done. We were out of business, because we had I remember we opened January 27th, 2017. I didn't have enough money to pay rent at the end of the month. We had to sell whatever it was, $3,000 to make money to pay the bills. And then the next month we start from zero, and we had to do that again. So I never had a burn. We never had investments. We never had big bank loans. Like, it was just, we had to make a profit or that was it. So that whole mentality guides a lot of my investing, where I'm like, how can I invest in these companies that just have been burning money for 10 years? And it works for like Uber. How long were they not making money for? 12 years or something like that before they were profitable, and it works for some companies, but like, just from my own lived experience, it's hard for me to throw money to companies that just aren't making money, because it's like you're burning my money. Basically.
I think too that there's this kind of hindsight bias happening, where we remember the Ubers, and we remember these names that worked out, and it's like, wow, I made 100 times my money on that one. Nobody remembers the stock in 2015 that went away in 2016.
Yeah.
You know?
Yeah. No, that's fair. So like, is there ever a situation, this isn't me asking you for money, but is there ever a situation where like somebody would approach you and be like, hey, I'm a business operator, you give me $100,000, I'll give you 25% of my business. Is there ever a situation where you're like looking at an opportunity like that seriously?
It's not something that I think is really inside my circle of competence. I do enjoy the liquidity of having the ability to sell my entire portfolio whenever I want. Now, I don't. Like, I'm a long-term holder. I've held certain companies for 10 years now. The majority of my portfolio is kind of like, I was kind of like the 2016 to 2018 time period when I really started getting more interested in dividends.
Yeah.
So, I don't sell a lot, but I do enjoy that ability where,
good luck liquidating out of a small business.
Exactly. And the other thing is that, in terms of, if I did invest in you, I get frustrated easily when it comes to, like basically it would be hard for me not to go to that person and kind of, give them hell when things weren't, to my expectations.
And then me as an operator, I'd say, you got to trust me.
Yeah. And you'd basically tell me to go to hell because it's like, and then, there'd be some friction.
Yeah.
So
because it's like, I'm trying to put myself in that shoes. I've never had money partners, but if I did, I think I'd be like, okay, I'm the operator for a reason. Mm-hmm. Trust me to operate. Exactly. And if they were pushing back, I'd be like, how about you come here every day then? Mm-hmm. And then you can have some, because like I'll tell a couple stories. I have one off the top of my head that it was actually the wife of a majority shareholder of a company. I won't get too specific because I don't want to dox anybody, but they weren't involved in the business at all day to day, but they wanted to be involved, whatever, right? So they would show up once every 2 weeks and just be like tornado through there, be like, move this and change this, and we're switching to this. Oh, I switched our payment processor. Oh, I did all this stuff, whatever. And then obviously, like, as the wife, like, she technically is the majority shareholder because, if you're married, you have the same assets or whatever. So she, they couldn't say no to her or whatever. And then they would just have to change everything back because none of it worked, right?
Just repair the damage after she's gone,
And then another one that more recently, so this is in my industry, in the liquor industry, rather. I would say that my industry, as if I'm not in multiple industries, but in the liquor industry for my startup, business number one, as I affectionately call her, there's a liquor manufacturer. I'm just trying to watch my words. There's a liquor manufacturer that has money partners, and the money partners were promised a 5-year return, and it's been 5 years now, and they're not getting a return. And they're kind of like, hey, like, this isn't what we signed up for, kind of thing. And let's say, for the sake of argument, the money partners own over 33% of the business, and then the people that are operating in on the kind of rest, right? So what they've been doing now is showing up when there's like a new batch of the alcohol, and they take like a third of it.
Really?
Yeah. And they say, well, if we're not getting paid out in cash, like this is what's happening now, and we have just as many votes on the board as you do, and this is what we're doing. Mm-hmm. So then I was talking to somebody from that works in the organization that doesn't own anything, and they say it's very frustrating when they're trying to do like small batch and limited edition stuff, and then half of their limited edition stuff is taken right off the top. But they're doing it because I could empathize. It's like they're not making any money from their investment, mm-hmm. and they can't get out of it, and it's like, okay, well, we're going to try and get our money out somehow. Mm-hmm. And obviously the retail value of something is much less than the cost of it, obviously. So mm-hmm. You're getting let's say this beer I'm drinking right now is worth $4. It cost $1 to make. You're technically getting $4 of value out, but it only costs the company that you own $1, right? Like it's I'm not saying it's the best mentality, I'm just like justifying why they're doing it. But I don't know what I would do in that position if I had money partners being like just coming in and either messing up my operation or doing stuff like taking product off the top and that I can't sell. Like it's very interesting.
Yeah, and I mean, like at the end of the day, with a money partner, if you execute, it's not a problem.
Yeah.
It's just when you don't execute.
Yeah.
Where for me as an investor, it's like, you know, like you were saying, there's really no option at that point. You can, you know, just you either suck it up or you do something like you said. Where if I own shares in a passively, you know, passive investment, I can just say, man, you know what, I'm out. I'm not doing this anymore. Or I can, you know, look more deeply and I can say, hey, maybe it's time for me to buy more, because in that scenario, the price is generally a lot lower than before.
I guess like something that I like about the small business as well, and also being like a majority shareholder, is like the sheer amount of control I get for my business. Like, do you ever have companies that you own a relatively large, I mean, it's all relative obviously, but like a relatively large position in that like management is taking in a direction that you don't want to go, but you're like, there's good bones here. Like I still like this company, because that happens to me every so often where I'm like, oh, if I just had a board seat, you know, I could turn this all around.
Yeah.
Does that ever get frustrating?
Well, for me, you know, in terms of that frustration, I usually just kind of, it's time to go away if that's happening.
Yeah, sell your shares.
But saying that, you know, when you kind of think to yourselves like, okay, what does a company have to do here in order to basically screw everything up?
Yeah.
And I think one of the biggest things as a red flag for me is transformational acquisitions.
Okay.
So you have a company who is, say, $100 million in size. All of a sudden it's like, hey, we're going to buy this competitor for $200 million and we're going to like fold the whole thing into our operations. And it's like, that's a big kind of nut to crack. And those are the situations where it's like, man, like those, yeah, they can work out. When they work out, there's a lot of upside, but there's...
Are you, is this a backhanded, my recent acquisition where I bought a company double my size and folded it into mine?
Not at all, because you have the ability to run that company and actively manage it, where I think that, you know, from acquiring businesses, that once you actually acquire it, there's a lot that you don't really understand until you actually own it. The other thing too is price is the protection.
Yeah.
And you know, from what we've discussed, it sounds to me like you're paying very attractive prices for these
and
these businesses, and that help you.
Yeah, I'm pretty open with all my numbers. Like, you know, I'm buying companies at 50% revenue. Right? Like where, so then that's also like, it's funny, in the last, you know, 2-3 years, as I've been taking kind of my stock investing more seriously, where I used to, like, you've seen me post all my dividends. I have like one share of so many companies I don't even know what they do, just because I saw them on Twitter in 2020 when I was first getting into, like, I started getting into stock investing seriously, in quotations, with like COVID bailout money. Like I was taking CERB from the government, and $2,000 a month tax free was like the most money I'd ever made in my life. And I'm like, so after I pay my bills, I'm like, I still have $1,000 left over. What am I gonna do? So I'm like, I started buying, you know, I bought a new computer, I bought a, you know, that $600 gaming chair behind you, and like all this stuff. And then I'm like, I still have money left over, because they just gave us $2,000 a month for like a year. So then I started getting more into stocks seriously. But then I didn't know anything about anything. So I was just like, anything that sounded good, I was like, you know, buying a few shares of. And like, there was some, like, I've had a couple complete losses that I've talked about. Delta 9 recently, our hometown hero marijuana company, just complete devalue, like zero.
Boy, marijuana has incinerated a lot of investor money.
Oh man, well, and as someone in the liquor business, I don't know how you don't make money in the marijuana business. Like, but whatever. Marijuana has better margins than also coming from someone who used to sell drugs. I know the margins are really good. Anyway, just kidding. In terms of service, that was satire. What the hell was I talking about? No, I've had a lot of business. There's still some businesses I have that are like 99% losses. Like, what's that? I own FLT, a drone delivery company. Bought it in like, I don't know, 2019, when it's like Amazon's going to be delivering all their packages by drones within 5 years.
Yeah.
It's like, fuck yeah.
I'm in.
95% down on that. There's a couple, like, I bought like I forget, that company that does like, invests in like building suburbs basically, and they're down like 90%. Like, it's just like, there's a bunch of stupid companies I own, but then I also like, I've been meaning to like sell all of them and just, put my money, but it's also like they're all under $10. Like, it's like, whatever.
Exactly.
It doesn't really matter.
Yeah.
So I've just been trying to like focus more on companies I actually care about rather than get rid of it. Whatever. Anyway, but I didn't know a lot about investing, but now more recently, I've as I learn more and more, and I learn, what a PE ratio is and what what all these numbers mean. Most of the companies that people are talking about on Twitter are like, I don't know how people find them attractive. Like, especially all these tech companies and something. It's like, I'm buying companies for 50% revenue and you're paying 100 times revenue. Like,
I agree.
I don't understand. Like, and so it's getting harder and harder for me. Cause like, even like, the age old, just buy the S&P 500 and chill. Now that like I'm running more businesses, I'm like, I don't even know if that's sustainable. Like with the multiples that,
very
that people are
expensive,
paying.
right? Yeah.
And I know there's obviously I'm getting a little premium discount there because I have to actively manage them, but like we're talking 200 times less valuation. Is very interesting to me, and that's something that's been on my mind in the last little bit.
The other thing I find interesting is that when you do sort of crunch the numbers and you look closer to the S&P 500, say, what you find is that there are a whole bunch of stocks that are, maybe not a whole bunch. So we'll say a third of the stocks are very expensive, and then you have a third of the stocks that are sort of more like kind of reasonably valued, and then you have maybe a third of the stocks that are quite cheap. And that's, I don't think my percentages are
Sure,
exactly right here, but the point is that there is value in the S&P 500. And I mean, the other day I talked about General Mills, a boring food company that trades at like 12 times earnings.
But like everybody knows the brand name of
exactly,
too,
and like they have brands that they have. Nature Valley dominates the granola bar section, like Old El Paso, and they've got all these brands, and so I'll tweet about it. I'll tweet about it, like nice plug there, and a lot of the feedback I get is like, well, it's dead. Like nobody wants to invest in it, and it's like, well, I mean, I go to the store and it's like I can see that granola bars are still selling, and I can see that all these things are still moving. And I mean, I've experienced in the grocery business, like I know what percentage of a grocery store's sales will be like in that category. So it's just the stuff that is available, that is cheap, nobody wants it because there's got to be something wrong with it because it's cheap, or it's gone down. There's got to be something wrong with it.
Well, I'm paying a lot of attention to Pepsi right now because they're down to 11 per times.
It's a little more than that. It's like 15 times earnings.
Okay, but still, like way down from peak.
Which is a 10-year low earnings multiple
and
for them.
Uncoupled from Coke as well, which they've historically been within, pretty close to. Very interesting. I'm keeping an eye on that because that's like, it's, so many brands that
and the worry is that Pepsi's brands won't be able to increase prices for the next 1 to 2 to 3 years. Well, if you're looking to buy something for multiple decades, you really doesn't matter that much. Like obviously you don't want to buy something that can't increase the price ever again. But like, I mean, I tweeted this the one day where it's like, the most popular chip in North America in 1965 when Pepsi acquired Frito-Lay.
Yeah.
Lay's Classic.
Yeah.
And
what is it in 2025?
What is it today? Lay's Classic.
Yeah, exactly.
And so it's like, in 60 years, they've raised prices like 49 times in 60 years or whatever.
Yeah.
Well, am I really that worried about what's going to happen like in 2026?
Yeah.
No, because I can look back and I can say, okay, like, they will get to the point again where they can increase prices on this. And people talk about the RFK and, like this.
Good luck.
Yeah, he's going to...
Good luck banning Americans from eating potato
exactly.
chips.
Like, and... it's like they've gone through this kind of stuff a million times before. It's like, what, you think today is the first, like, that people have figured out the chips are bad for you? Maybe you shouldn't eat so many?
Yeah.
Of course not.
Yeah. Well, that's how I kind of feel in the alcohol business as well. Like, there's definitely a Gen Z trend away from alcohol, but I think it's something that's going to outlive all of us. It goes in ebbs and flows and whatnot. I guess, like, if I can ask a question, why is it? And this is like I'm dumb, so I ask smarter people questions. Like, why is it that when we're talking about a company that's trading at like 12 times earnings is cheap? Why is it that I can buy a company for like 25% earnings? And if someone offered me for something for 12 times earnings, I'd be like, are you insane? Like, why is that? Why is there such a big disconnect?
Because I don't have to do a goddamn thing.
Sure.
That's
and that's really worth that much money?
Yep.
That's crazy to me.
I mean, like, you're young and ambitious.
Sure.
And the people can see my graying beard. Like, there comes a point when you don't want to deal with those headaches.
Yeah.
And for a lot of people, they just never want to deal with those headaches.
Yeah.
So they are willing to pay that premium for that. And there's an awful lot of passive money out there, whether it's, pensions or, just everyone else's retirement savings. They all flow into the same stocks. And that's what happens to the valuation because like it's all supply and demand, and all the money's going to the same 500 stocks or 1,000 stocks or whatever.
Yeah. It's just, I think like the more I think about it and the more, I'm on my third company now, my second acquisition, I think I do want to take my career in the direction of like buying and operating companies.
Like a Berkshire Hathaway?
Yeah, but I think like even like Berkshire is more like, maybe Berkshire like 30 years ago more so. Like, nowadays I don't think they do that as much. Like I'm thinking of their like Dairy Queen and Geico and stuff where they bought 100% of the businesses and then kind of put their people in management positions and stuff. I don't think they do much of that anymore. I could be wrong.
Well, I think they'd love to, but there's just not the opportunity. Buffett is just so disciplined when it comes to that. And I think lately there hasn't been a lot of stuff that he's willing to pay the price needed to take it private.
Yeah, well, I know he thinks that everything's overvalued right now, and also I'm certain that his age is on his mind, especially after Charles VIII passed away. I can't imagine he doesn't think about that every day. Where he's like,
of course,
every decision I make.
In fact, I'm
not going to be around to see.
I've said for a number of years now that's the big reason why he's building all that cash and everything is to clear the deck for the new guy. Yeah. And then it's like, hey, you've got all this cash, like it's yours
make me
now.
Proud kind of thing.
Yeah, and it's like versus if he puts the new guy in the position of he buys a bunch of stuff and then it's
like, wait, what were we doing with this?
Yeah, and it's like, okay, it's your problem now.
Yeah,
that doesn't put the new guy in and that's just how good of a guy that Warren is. That he's not so much worried about his legacy; he's worried about
Berkshire's, right?
Yeah, for sure.
Yeah, and I think like Warren Buffett is undisputably the GOAT. You hear that from people that are like have read one investing book and like they skimmed The Intelligent Investor and they're like, yeah, Warren Buffett's the GOAT, but it's like he undoubtedly is. But yeah, I think that's the direction. I posted. I can't remember what it's called now. I have it written out on my phone. What that kind of company is called? It was like permanent equity company or something like that. That's like because and it differs from private equity because private equity
wants to flip.
Yeah, like get in, chain, like streamline things. Like do all the things that I've been doing with my acquisitions where I buy the company, get rid of the old processes, bring in new ones that are cheaper and easier, get better, suppliers and supply chains and, train new people and whatever and get the efficiency way up. And then they want to do that, raise the valuation and then sell the company. But I want to like do that and then get the dividends from that forever.
Yeah.
Right. So I think that's kind of the direction I want to take my career. And the biggest thing that I'm having to get over, I guess, mentally, is like to be able to achieve those kind of goals that I want, I have to like not be actively managing every second of every business. Because right now I do more than 40 hours a week at all 3 businesses that I own. And I do every part of them, basically every part of the job.
That doesn't scale, does it?
No. And I'm learning that. I'm just about reached the peak, because if you did the math there, 40 hours a week minimum at 3 businesses is just about every hour that I'm awake. Which is fine. Like, this is what I want to do. And it's right now, because like the startup's still in a little in debt, and we're in the growth phase of the other businesses. Which is funny to say after like those businesses are 115 years old and 93 years old, but that we're in the growth. But like we're in the growth kind of like the new age of the businesses, where I'm like getting stuff online and like getting new clients and whatever. I'm reinvesting a lot of the money. So doing a lot of the labor makes sense, because think about how much 120 hours a week of man hours costs me to pay people to do the work is like a lot. So it makes more sense for me to hold on to that money and then reinvest it and make the business better while I have the energy to do so. While I have the sugar-free Monster energy to do so.
White can?
I'm a big Mango Fiesta fan myself. Yeah. But I've also been drinking a lot of the green can.
The green, like the OG?
Like no, the green like sugar-free one. It's like an all green can.
Yeah. I don't know that one.
And then they just released a guava one too, which I've been interested in. The pink one too, or the orange one. I'm a big wholesale club.
You know your monsters.
Wholesale club, which is like a Loblaws owned Costco ripoff, basically.
By the way, Monster is another company that does not pay a dividend and really should.
Yeah, but Coke does.
Coke owns a portion of Monster.
I thought they owned 100% of it.
No, they own a portion. You can buy Monster shares on the NASDAQ if you're... In fact, the last non-dividend paying stock I bought was Monster. I did an arbitrage situation on that.
Okay. Monster, I think, is the best tasting of that category.
I agree.
In my opinion.
I agree. I had to cut them out, actually. I'm sad about it.
Because you drank too many?
It got to the point where I was not getting the...
effects.
I wasn't getting the effects anymore, and it was like,
Yeah.
It's kind of like, man, like, what am I doing here?
Yeah.
They're not helping me. They're delicious, don't get me wrong, and like that was a part of it for a while, where it was like, these aren't helping me, but they're delicious, so I'm going to keep going. And I had to just...
I was talking to a customer yesterday, because they were like, oh, you ever eat at that food truck or whatever that's at the farmer's market? And I said, oh, no, I'm a sugar-free Monster kind of guy all day or whatever. And then he's like, just watch out. I used to drink 2 energy drinks a day, and then I had a heart attack when I was 42. And that's what they said was going to be part of it. And I told them, I used to do like 3.5 grams of amphetamines a day, so this is better than that. And then he's just like, ha 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 ha.
An awkward laugh. Yeah. I'm not sure if you're joking or not.
I'm like, bro, this is the least bad thing I put in my body. Like, so you're fine. Yeah, I don't know. So I think like that's I need to get over that next hump of like I need to be able to... I don't know what the next step is, honestly. I'm kind of figuring it out as I go along. Like, if I were to do what you did, where it's like start at the end and go backwards, it's like I need managers in place like that can manage the operators of the individual businesses.
Exactly.
And then basically report back to me on like...
And then you do the CEO...
yeah, because I right now I make every single, like, if all 3 businesses, like between me and my business partner, I'm not discrediting him, like he does a lot of this too, but like between the two of us, the ownership, we order every single supply, we order we pay every single bill, we enter every single bill, like, all that stuff. It's like all us. So like my employees at both companies kind of like, they have a list of stuff they need us to do or buy or whatever, but like I would like to be in a position where I don't have to do any of that, and then the manager just asks permission from the, I don't know, district manager, for the lack of a better term, to do that or whatever, and then I just get a report at the end of the week that's like, here's what we spent on this and here's what whatever. Like that's that's like thinking in the future. That's kind of the setup that I want to work to, but I don't really know right now how I get from where I am today to there. And I think the answer is the answer to most questions, which is just more money.
Mm-hmm.
Gets you there, because it'd be really nice to just hire somebody for $100,000 a year to just do what I'm doing, which is operate, and then I can focus on like expanding rather than operating.
And then there needs to be a point where your businesses have to be able to pay for that.
Exactly.
And that's the
yeah,
that's the problem.
So yeah, I mean, like, but I make enough money to pay my bills right now. So other than that, I'm just learning, I guess. Like it's I kind of consider it business school in a lot of ways, like my startup especially, where
and the problem is when you're you're younger than me, you're ambitious, is that these things take time, and when you're anxious to take that next step, is you don't want to spend the time. And so that's always going to be a problem. Nobody wants to get rich slowly.
Yeah, which is like I tell people that all the time as well, though. It's like you can't cheat the hustle as much as you want to. And I think like I have a fundamental problem, I think, with a lot of startup owners, especially in the liquor industry, because I find the liquor industry, it's a lot of big players, and then a lot of the people that start very large because they want to compete with the big, because to be able to compete with Molson or Anheuser-Busch, like you have to go a little bit, like you have to have money behind you for marketing and buying taps and like all this stuff. So like a lot of people in my industry, in this city at least, that I'm acquainted with, they start with $2 million or whatever. They start with mortgaging their house and getting money partners and all this. And when I started with $50 that we bought homebrew equipment with, it's just such a different world. Like it's just such a different so I have a lot of problem with people, and like I don't have a problem with people if you have a house to mortgage and you get money from people, or you have a rich family, whatever. I don't have a fundamental problem with that. But what I have a fundamental problem with is that some of these owners that like buy a brewery or start a brewery with this dollars, and then they're never there, and they just hire people to run it, and they go golf and whatever, and it's like, why are you in a business? Like just
exactly, like there's a whole passive investment
vehicle
process,
right? You can just do exactly what you did and just buy Anheuser-Busch shares if you want to own a brewery. Exactly. But I think for a lot of people it's like I want the cloud of being able to show my friends that I have my own beer or whatever, which like I guess that I'm in it for a different reason than that. And I just really always wanted to build something. Like I always had this craving to just like build brands and like companies and stuff like that. And I don't know. So it's I don't know. So I am very tired, but I don't know if I want to say enjoy, and I enjoy, like I'm not happy for sure, but I think I do enjoy my life. Like I wouldn't do it any other way.
Right.
Like, so yeah, because I've been doing the winery full time for just about a decade now. I'm 29 now. We opened when I was 20. But I started when I was 18. Like we wrote the business plan, we got a building, we did renovations, all that stuff was like when I was 18, and then we opened like when I had just turned 20. So 10 years of doing something is a long time, obviously.
Yep.
Could I have worked a job and thrown all my money into the S&P 500 and basically been living on my dividends right now? Probably. However, the amount of, I guess, like accomplishment I get from doing what I'm doing is a lot more than I would get with a big stock portfolio, I think.
I think that one of the things for me that I've realized, like more in the last few years, is that people do things for very different reasons. Like you can look at 5 different business owners who own 5 different businesses, and they're all doing it for different reasons. Some might be there to maximize profits. Some might be a vanity project. It might be like someone like you, who it's like, hey, I can see the next step, and it's like it's a cog in your machine and in your life. And what we do is we judge people based on our goals rather than their goals.
Yeah.
And for me, it's like, I think a lot of that comes back to that, where it's like, if someone wants to buy these what I deem to be overvalued stocks and try to flip them to the next guy, well, by all means, like if that's the way you want to do it, then, and if your goals revolve around that, then absolutely. So I think that just keeping that in mind when you're talking about something, when you're looking at it, that's the important thing. And then for, like you said, like, it's kind of, what are you doing it for?
Yeah.
And that's the important part of anything in life, because if you're not doing it for the right reasons that motivate you, then you're not gonna do it for that long.
That just made me think, like, when I'm acquiring businesses, which I want to continue doing, part of the process of like looking into a business, like more so than the books, is like figuring out the mental position that the seller is in, right? Like, because now that I haven't really even thought of this, but I was thinking about like the last two businesses I bought were the owners were retiring or whatever, but then like the last one, the most recent one, the seller was kind of in, and I don't want to air out his stuff, but like he wasn't in the best financial position, right? Because like, good luck trying to buy a business from me at 50% revenue, like my startup. I like, like, are you kidding? You pay me 100 times, or you pay me Tesla valuation for my startup. This is what I carved from nothing. I'm not selling you this.
That's your baby, right?
Exactly. Yeah. So it's interesting. So even like being able to identify that mentality with like, if you have 5 different startups that are all being sold with 5 different owners with 5 different mentalities, you might need to also shift through that to find the one that's like, they're selling for the right reason. Because I always hear a lot like, I follow a couple people that like are, have a work at a firm or whatever that sells businesses, and one guy that's like a lawyer that represents, buyers and sellers or whatever. So I've been like diving more into this kind of world, and you always hear the sellers are always like, oh yeah, if you did any marketing, it'd be really easy to increase profits by 20%. It's like, well, if it was that easy,
all these armchair
you'd be doing it the whole time.
Managers who just think they know better. It's like, just throw up a website and you'll double their business. Like the owner didn't fucking think of that.
Exactly. Yeah. So you got to think about like why people are selling, for sure. And I think like we're in a really interesting time right now where I posted something like the other day, like statistic that like 42% of boomer businesses have a succession plan, and then the rest are just gonna disappear. They're just gonna close them. So that's a lot of opportunity out there, because most of these businesses profit.
Oh yeah,
and a lot of them make good profit, like margin wise, like effort wise, like you're making them pretty good money. So there's a huge, as boomers, over the next 20 years, there's a huge opportunity for a lot of people, I think.
Oh, for sure.
But I need to go bigger next year. Next time. Don't worry. Secret project number 1 and number 2 are in the works, but I don't have any other acquisitions on the horizon at the moment. But next acquisition, I need to go larger. I've now made the mistake of buying a company that's owner run, that I think I can just hire a manager to run and then not be that involved, and it did not work the 3 times I tried to hire different managers. So I'm on my 4th employees at the business number 2.
So we talked about my weakness in terms of the not being able to in an active business, maybe being a little bit too active. Is that a weakness that you have as well? Like you say you've gone through 3 managers, and then there's that old saying where it's like, well, if everyone's an asshole,
you're the asshole.
You're the asshole. And I didn't want to call you an asshole because you're not. But is there like an emotional attachment there that is maybe clouding your judgment a little bit?
You know what? I think, and I like constructive criticism. I think I really don't get personal when it comes to this kind of stuff. And I don't think I'm deluded. I don't think I'm like, no, I'm the best and like whatever. But I think,
lots of business people get into business because they don't want a boss anymore.
For sure, yeah. But I think with this specific example, I think if you go back to the original thread where I posted all the details about the my first acquisition there, you can read in there that we had family member, I guess it's all public, it's all out there, but it's my business partner's brother, was going to come on and work for us and run the company. And then he was going to work for a wage for 2 years. And then after 2 years, he'd be able to buy 33% of the business.
Right.
That was the deal. And he quit after like less than a month, because it was too much for him. He was overwhelmed with what needed to be done. So then I hired another person, who quit after like 2 months, and quit like stupendously, like not on good terms, like basically accused me of fraud, and like
middle fingers up the whole way
it
out.
was like the weirdest thing ever. They were basically, because like I gave them the same deal where it was basically like we just changed the name on the agreement, though, like you can own 33% if you work for 2 years kind of thing. Because we thought, like, my business partner Zach and I thought that this was like the way. We're like, we want someone that's going to be in it for the long haul. We both have full-time jobs at the other company. Like, you know, we need somebody that'll like really get invested. And then the second person quit, and then they were like, "Oh, this agreement for me to buy 33% was fake, and you were just trying to screw me over and whatever." And then it's funny looking back. I was very upset at the time, but now it's like funny looking back at it, because I'm like, what was my grand plan here?
Yeah, exactly.
Was to screw you over so then I had to do all the work. It didn't make any sense. So I don't even know where that came from. Like he claimed he had a lawyer look at it, and I'm like, I guarantee you didn't, because my lawyer wrote it. Like it's there's no, I guarantee you, not a single lawyer in the entire world looked at that and was like, this is a fake agreement. What does that even mean?
Yeah,
Anyway,
exactly.
Whatever. I don't try to think about it too much. But anyway, so then I hired a third person, and then, like, to be completely fair to them, they were good at the job. They just had some chronic health issues.
Right.
That they just couldn't do the job anymore. And that's so we paid them out the whatever severance and whatever. That was, on good terms. It was just like we had to have the conversation with like, hey, if you're missing 3 days a week of work, and I had to wake up at 6 every morning to check my phone to see if he was calling in.
Right.
Sorry,
that's
like
a problem.
it's not sustainable, right? Like, so after losing the third manager, really in less than a year, I said, like, fuck it, I'm doing this all myself.
Right.
And I started showing up 5 days a week, and I'm like, I'm going to learn everything. I'm just going to do this completely myself. Because I was just so frustrated with how it was going. And then, like, just a short caveat, I think that's one of the main reasons why I was able to acquire the third company, was because being there every day, I developed a relationship with the owner of the other competing rubber stamp company in the city. And I think he saw me putting in the effort.
Right.
Because I now employ two of his former employees that have worked with him. And apparently he had a couple other opportunities that, like, of people that were going to buy the company, and he chose to approach me instead.
Right.
So I think, maybe I don't believe in, everything happens for a reason, and universe and God and karma and all this stuff. But I think maybe, I was there every single day, and that got me the new opportunity. So
for sure.
But anyway, the lesson that I took from that situation was, like, the things that I fundamentally thought drove people is like, just because it drove me is like completely a lie. Like, I thought that, like, if somebody had approached me at like 20 years old and said, I will give you 33% of a profitable business, all you have to do is work here, I would have been like, let's go. Like, this is, this is a great opportunity. And I thought that opportunity would be too good. Like, that would inspire loyalty in these people. And it didn't. And it not only did it not, but it, like, blew up in both times in my face. So I thought that really made me change my mentality on, like, not even like what people are, because I don't want to like disparage anybody, because it's like not even what people are capable of is what I was gonna say, but like what people like want out of their experience and their life, and you know, a lot of people just want to show up and do their job and leave and not have to think about it, and a lot of people, most people, don't want to actually be owners or entrepreneurs, and I think it's been glorified a lot in you know, TikTok and whatnot, like the life of an entrepreneur or whatever. But so that's what I think. It wasn't my fault at all. Just kidding. It's just, you know, you know, I think that, like, and maybe that was my fault in was, like, I pushed them too hard because I thought that I'm like, well, this is the opportunity. Like, this is what you've been waiting for. This is what you always wanted. Like,
I think too that you push yourself to a certain extent, and then maybe you might expect that of others, because it's like, well, I'm not expecting anything more than what I expect out of myself.
Yeah.
And then from their perspective, it's like, well, I only expected this, and like the expectation being pushed on me is this.
Yeah.
And there's a disconnect there. So it's like, it just comes down to both of your expectations coming into the into the situation. And I'll add too that I think if you talk to any business owner, the number one thing they would say is that they lack is good people.
Yeah.
You know.
Yeah.
It's a challenge for everybody.
Yeah. Yeah. And that's like that's like, you know, and I think like my I had a tweet thread about this recently where I was talking about, like, that's been like my biggest issue is good, reliable people, and that's why it's been so hard to expand the businesses. Where I have a couple really good employees at both businesses, some that work like as much as I do and go up and beyond, and like I can't even pay them enough like of what they're worth. But then I have a lot of just people that are in one door out the other door, like, you know, and that's not having the like baseline, the like reliability. And which we talked about off camera, like redundancy as well would help a lot, where if I had, you know, the entire department doesn't fall apart if one person quits, right? But then all of that comes back to, I just need to make more money. I just need everything, all three businesses plus all my side stuff just needs to come together, just make more profit that I have at the end of the month. And if I can pay people better, you can attract more talent. And if it's a more, you know, because I don't blame somebody for not wanting to work for $20 an hour for their whole lives. Like, it is what it is, right? So I would love to be able to pay people an opportunity that's like too hard to not take, and then I think I can attract more like-minded people, for lack of a better term, I think.
Right.
Yeah. But, you know, then can't cheat the hustle. I just got to put in the work and make the money, and then it is what it is. But
yeah, I've always found it fascinating in my kind of former you know, like kind of employment, is that, you know, there's always this disconnect between kind of the passion of the owner and the passion of an employee, and it's kind of like, you know, for me, it's like, why would an employee get to the point where they're passionate as the owner? Like, why wouldn't the employee just be an owner then at that point? And, you know, like you talked about that situation where you gave someone the potential to be an owner and they kind of fucked it up. You know, like it's kind of like, I don't know. I can see it from the employee's perspective, where it's like, hey, like, you know, if I was that passionate, then I would own it, and then I would participate in the upside. But it's tricky because you gave people the opportunity.
But I also like don't agree to it then.
Yeah.
Like,
yeah, exactly.
they signed the paper that said I would do this amount of work to become an owner. You didn't have to come in that agreement.
You could just say, hey, like, do you have something where like I can just be the manager?
Yeah.
You know,
and then
like,
I would have said yes.
Yeah.
Right. So, but like I was falsely under the impression that I'm like, well, if money alone isn't going to make someone stay, what about ownership?
Do you think maybe that it's something that, you know, you talked about how the person said that the agreement was fake or whatever.
Yeah.
Is it maybe something that the average person doesn't understand? Where it's like, you know, it's like, hey, like, this is actually a really good opportunity, and whether people are cynical or whatever, it's like, well, no, it's not.
Yeah.
Do you think that maybe like kind of plays into it?
I don't know. It's like I find like, so when I do product testing, I usually like give it to my mother. And if my mother can figure it out and use it without being frustrated, or you know what I mean, like
Mm-hmm.
ordering on the website or whatever. She can navigate my ordering the wine on my website, and she can get to the end without complaining or giving up or whatever. Then
Right.
it's good for the average
idiot
person.
proof.
It's
Yeah.
idiot proof, right? No offense, mom.
Yeah.
Um,
Your mom's great.
yeah, but
Not an idiot.
but you know, stuff like that, or it's like even like taste profiles and stuff for the wine. It's like if she likes it, then the average person probably will.
Right.
And they just, both my parents, and you know, I love them, but like they just have such a fundamental, not even misunderstanding, but I think just like you start talking to them about like business, and it's just like their eyes glaze over. Like they cannot comprehend. Like they'll ask me about like, oh, we saw you were at this event, how did you do? And I tell them, I'm like, oh, you know, we did, you know, 10 grand over the weekend or whatever. And they're like, wow, that's so great. Like, can you pay off some of your credit cards now and stuff? And it's like, I don't think you have any idea. And then I've tried to explain to them, I'm like, man, like we're spending between the three businesses, I spend $80,000 a month on nothing, basically.
Stuff that you need,
just
yeah.
rent and whatever, you know, employee, like just keeping the lights on. And like, I think at a certain point, the numbers get so big, they're just like, they don't even they don't get it. So that's just like, that's my only, I'm just trying to compare what you're asking to like other things in my mind where in my experience, where like, does the average person understand the opportunity? Do they even understand business? They don't understand anything.
No.
And yeah, Occam's razor would say they just don't understand at all. Like that, you know.
I think too, I've talked before on X and on Twitter about having an optimism bias. And I think that that's just this massively important thing where you look at a stock, you look at an opportunity, you look at business or whatever, and you go into it as like, hey, this is an opportunity, you know, like you go into everything optimistic. And I'm not saying you go in there like, you know, with your eyes closed or whatever and just like assume everything's going to work out. Of course not. You have to be a certain amount of questioning or whatever. But when you go into something and it's like, okay, like if you go into it and believe that people are good, that, you know, like that they're doing their best, there's an opportunity, and so on and so on. I think that's a massive advantage in life versus going into it thinking about how, like, if your first thought is, how is this guy going to screw me?
Yeah.
Like, I think that that's just such a limiting way to look at life. And the people who look at life that way, I think just end up not succeeding as much as having that optimism bias.
Yeah. Yeah. And I guess like my only caveat would be like, don't be naive about it.
For sure. Like I said, like, you know, you can't go in completely blind or anything. You have to, you do have to look at things with a critical eye, but, you know, like if there's certain people out there where it's 100% critical eye.
Yeah.
And that's where I think that people get into a lot of trouble, and that will screw up perfectly good opportunities that are in front of them.
Yeah, because I guess like, well, if I had 100% critical eye, I wouldn't have started a business in the first place.
Exactly.
Because it doesn't make any sense.
Exactly.
Go get a job.
like you like not only would you get a job, like you go work for like the government or
Yeah,
something.
well, yeah,
You know, because it's like
that's the least amount of effort for the most amount of money.
and you know, the government's not going to go out of business.
Yeah,
You could
exactly.
even look at like, you know, big companies or whatever. Well, what if they go out of business?
Yeah,
And it's like, okay, well, what if they do? Like,
yeah,
you know,
yeah.
what if
yeah.
they don't? What if they succeed?
Yeah, I guess like it's funny because like the risk that's associated with like small business has like never been a risk for me, because I just think about it the opposite way, where it's like everything is in my control as a small business owner. Like I can physically go out there and hustle more, like, and so that's why like operating the business has like never been a risk for me. Like it's, you know, banks and stuff always say that, well, you know, statistically,
Yeah.
it's like, well, I'm not a statistic. I can just wake up and make more money if I need to.
And that's an optimism bias right there.
Yeah.
That the world is filled with opportunity. It's just up to you to grab
Yeah.
your portion of it.
Yeah.
And it obviously doesn't work all the time, and you obviously have to be critical and saying, like, you know, if you have a stamp business, maybe you shouldn't be selling, I don't know, like fancy green cups, you know, like
We could laser engrave them though.
oh,
I have the equipment.
can I like put some dirty on there?
That for extra.
Okay,
Okay.
we'll talk later. We'll talk terms.
Yeah, I don't know. I guess like I've also like never, this might sound bad, but I don't like think about what can go wrong at all. Like, I feel like I just kind of like go, I just do it. Like, it's like, and I feel like that maybe that's like not something that an investor would want to hear in an operator, but like I think that's one of my best qualities is that I'm just like so stubbornly optimistic that I'm like, well, it's just, I'll just make it work. We'll figure it out. We'll figure it out is something we say at board meetings, my business partner and I, for half the thing. How are we gonna deal with this? I will figure it out. I don't know. Like, you know, and then for the last 10 years, I have just figured it out.
Yeah.
So, you know, I don't know. It's
I think when you look at you know, my world stocks, every single stock has a bear thesis.
Yeah,
It
of
doesn't
course.
matter which thing it is, and you know, you can look at that and you can say, okay, like is this a big enough deal that it's going to matter? And that's the, you know, why I love to write about what I'm thinking about, and because it's like you can look back at what you've written 5 years ago and it's like, hey, guess what, that didn't matter,
Yeah.
you know.
Yeah.
And that's, I think, a hugely beneficial thing for people to do is just have that ability to look back at what you were thinking,
Yeah.
and kind of
Well, I've been
see what,
documenting. I
see
think
what that is.
documenting is important. Like that's why I have the finance Twitter. Like, but even before that, I've been documenting my day on Snapchat for the last 15 years. Before that, I have Facebook statuses like talking about this stuff. Like I think documenting is important. I've been doing podcasts and videos and stuff for a long, long time. Basically my entire, well, for sure my entire adult life, but even before then, because I think I think it's important. I think it's like, you know, I don't want to make my life sound too important, but it's like, you know, when we find some book from 2,000 years ago that's just some mundane thing, we're like, well, that's cool that they wrote down about how the shipment of copper that they got wasn't the highest quality. You know what I mean? It's
Yeah.
like, I think like as a species, I think documenting and history, I think is important. So that's why I do it is,
I think just in terms of learning in general, where it's like, you know, if you document for yourself and you just use it for yourself, you're still learning.
yeah,
You know, you're still like seeing how you evolve as a person. In terms of just like, you know, in general documenting, I mean, I read a lot. I love biographies. I'm reading a George Washington biography right now, and George Washington was very detailed in recording his life and his correspondence and everything, and because of that, we can look back and have an incredibly detailed look at kind of what happened during the Revolutionary War and during the first Congress and things like that in the United States. Hugely beneficial for mankind, and you know, just for guys like me in general. It's like, hey, I'm interested in this, and I get to learn pretty much directly from the source.
yeah,
Awesome.
yeah, yeah. Yeah, well, we've been going for an hour 15. Is there any final topic you want to talk about?
You know, the fun of these podcasts is that we started out, you know, just kind of,
First like 2 minutes, I might have to cut out. We didn't know where we were going,
and
but
then
we found it. We
yeah,
found it along the way.
it just kind of and just goes in the direction, which is always a lot of fun. You don't really know what you're getting into.
Well, it's fun to bring us together. We're from very different worlds, but in very we have a lot of the same interests as far as
For sure.
finances go, which I also find interesting. Where it's like we're trying to get to the same goal, which I guess is financial independence. I guess like if you had to boil it down to like nothing, but we're going about it literally the farthest part away we could possibly get.
For sure. And yet, you know, we still find this common ground, and
Yeah.
we still have enough in common that we can kind of talk about that. And I think that's the, you know, you look at X and everything on there, and it's like, it's almost this tribal kind of thing where if somebody doesn't invest in the proper way, then people get upset and there's arguments and there's everything. And like at the end of the day, it's like we're all after the same thing.
Yeah.
And if we have different paths to get there, that's what makes life interesting.
Yeah.
You know,
Otherwise,
like,
otherwise we wouldn't be. Why are
Exactly.
we even talking about it?
exactly.
Like,
And
yeah.
so that's why I don't have a lot of patience for people who want to, you know, bash dividends or bash guys who own small businesses or whatever, because it's like, you know, that's just you're crapping on someone's dreams.
Yeah.
And that's a shitty thing to do.
Yeah. Yeah. Well, I'm a little bit of a troll on the internet, and I don't usually take it lying down. I usually don't care what other people say, and if they don't own a business, I call them broke, and if they do own a business, I call them incompetent, and if they if they're a landlord, I tell them they should just buy REITs, and if they just own REITs, I show them like, why don't you just manage a house yourself? And I always have the contrarian opinion to no matter anything anyone says.
And that's why you should never take social media the least bit seriously.
Yeah, someone was asking me how I got my 5 million impressions on X to get monetized, and it was literally just spamming Republican influencers with like just completely false, like provably falsified Biden propaganda.
Did you ever get community noted?
Not, I think once.
Yeah.
Yeah. I don't. They were never big enough. I was like aiming to get like 100,000 reply or impressions on a reply.
Right.
Because I needed like 55,000 a day to get 5 million in 3 months. So I was aiming for like 100,000 a day.
Right.
Would be my like, so I can get it faster. Some of the stuff I regret. No, I don't regret it. But I look at, sometimes like I search for a tweet or something and one of my old ones comes up. It's literally, I was just like sharing Photoshop documents being like, Kamala is stealing the election. Like this is proof, just nonsense. And people were eating it. And it's like, 120 retweets. And
people are getting...
Oh man, people are crazy. Yeah.
Yeah.
But that's what I love about the internet is that it's all fake and it's all just people living in my computer, and it's very interesting.
You know, we both have a big dislike of politics. Not really dislike, I suppose, because I'm interested in it. I just don't give a crap about the average Twitter user's opinion.
I'm interested in the same way I'm interested in like the Star Wars universe, where I'm like, I know it's not real, but it's like entertaining. You know what I mean? So the same way where I'm like, have you ever met Donald Trump? I don't know if he's a real person. That might be AI. Who knows?
It could be.
Yeah. No, he was in Home Alone though, so that's real.
Home Alone 2.
Right. Yeah. No, I don't know. Yeah, I don't care about politics at all. I posted a meme the other day that was like Samuel L. Jackson from Pulp Fiction going like, I wasn't asking you a goddamn thing. And then I was like, when I'm making fun of a liberal and a conservative chimes in, I'm not on your team, buddy. I think it's just two idiots trying to outsmart each other, and then everyone just... I used to say like it was like your sports team.
That's a great
you
analogy.
want the red team and the blue team, but now it's like even worse because they'll like die for their sports team, which I guess like maybe people do, but it's insane. This is the stupidest. It's cognitive dissonance on display, and yeah.
I always enjoy it when the people, their team doesn't win, their party doesn't win, and it just ruins their year.
Yeah.
And it's like, guys, like this is not looking at a world with an optimism bias.
No, I think if you're not worth $100 million, you shouldn't care about politics. After that, you might be able to start influencing policy and stuff. And maybe Jeff Bezos should have gone to Trump's inauguration because they can actually get, through donations or whatever, they can get say what you will about Elon Musk and his whole White House experience. I mean, it blew up in his face, but that was a smart idea if he wanted to get a bunch of like EV credits and space contracts.
You were right there to influence the guy you need to influence.
Exactly. Especially someone as dumb as Trump that just like listens to anything that the last person told him to do does. Like all Elon had to be was like, yeah, buy 500,000 Cybertrucks from us, and then they do, right? And then yeah. Because it's not like Biden was any better, but I feel like you would have been like, buy Cybertrucks from me, and then he would have been like, what's a Cybertruck? Jack.
Wasn't that a South Park episode way back in the day where it was like it was the class elections and
turd sandwich
versus a douche? Yeah.
Douche, yeah.
Yeah, that's like, and that was
about accurate.
20 years ago.
Yeah.
So
as relevant as ever.
Exactly.
But no, I think it's all dumb. But
Charlie Munger says that caring too much about it cabbages up your mind. Yeah, and I agree. It's like, go vote, participate. Support who you're going to support. Fine, but you vote and then it's done.
Yeah.
And it's like, then at that point, if a party implements something you don't agree with, you either adapt or you leave.
Yeah.
There's no whining because it's just a waste of everyone's time.
One of my favorite sayings is that I say to people that don't like me or that have a problem with what I say, kill me or shut the fuck up. Those are your two options.
Mm-hmm.
Complaining about it's not going to do anything.
No, it's not. But we like to complain, don't we?
I don't think we complained at all. I think we were very positive and optimistic.
No, I mean just as a
I don't think we ever,
species.
I don't think. Okay, yeah, everyone except me and you. I think we're very good.
I'm guilty of it sometimes, but I try not to be.
I've never complained my entire life.
Not once?
No.
No?
No.
I don't believe you.
I'll check your math on that.
Math? I'm going to complain about this interview when it's done.
Anyway, you have
who's interviewing who?
You have a newsletter.
You can find me at CanadianDividendInvesting.com, where unsurprisingly I talk about dividends.
Yeah, and you have a newsletter. It's great. Subscribe to the free one. It's free. Pay them a little bit more for better insight. You can. I don't have that kind of money, but I do listen to your insane ramblings on small cap dividend stocks every so often, and then I don't use a real broker, so I can never buy them.
But you should be able to. Most of them, like on Wealthsimple,
okay.
You should be able to.
They're
not that obscure.
There was one or two I went to go put on my watch list, and it wasn't on Wealthsimple.
That was that Monarch Cement.
Yes.
That one is a little bit obscure, but what a great little.
Yeah, me and my business partner were going to buy some shares, and then we're like, oh, can't.
You might be able to now. Wealthsimple has expanded.
Yeah, they're doing good. I'm Wealthsimple gang for life, man. They're getting better and better with their stuff.
I moved over in January, February with the bonus.
Yeah,
and it's been fantastic so far.
I
cannot give them enough kudos. Like they're taking over.
Yeah, I've been using them for close to 10 years, and seriously for the last 6 years, and even the features that they've released in the last 6 years have been huge, monumental. So I'm looking for a little bit more. They have covered calls now, but I'd like a little bit more option selling availability. Would be nice, and then more statistics is what I'm looking for. But they did release a little bit more recently, like in the last update. They did you can see how many dividends you've been paid in the last year or whatever. But I'd like projected dividends.
I was just about to say that I was with Qtrade before, and Qtrade was great in terms of they'd have months out,
and they can do
your dividends.
They can do you can do pie charts with industry and stuff too, right on there. Yeah. Because that would be cool. I would love to see weighted how my portfolio is weighted and stuff.
I'm not even sure you can download your portfolio to Excel from Wealthsimple. I've never tried it.
I've never tried it either.
Yeah. So there is some stuff that they are lacking, but they'll get there.
I think they just announced they're doing credit cards and stuff
really going after
Robinhood
banks
is now. And I also saw an interview with the owners that they said they're not really, or they're not at all looking to sell out to a big bank. They're really trying to go for it.
Yeah, well, they've got the Power Corp as their backer,
right? Yeah.
Various there's IGM. Is the largest actual individual investor in Wealthsimple, because they point that out on their investor
relations,
which is hilarious, because it's IGM, for the people who don't know, is the parent of Investors Group, which is sort of the old school Canadian financial planning company in a nutshell. It's expensive mutual funds, on and
pay
so
me
on.
4% to tell you to invest in the S&P 500.
Yeah, exactly. And then it's the oldest part and then the newest part in the same company sort of together, which is just a fascinating kind of situation.
Hey, it's diversifying, right?
And it's everyone talks about Kodak, how Kodak didn't embrace digital until it was too late. And you could argue that IGM is on their way out. Is on their way out, and kudos to them for diversifying. But wealthy backers, and they're really going after the banks, which is interesting.
So shout out Wealthsimple, CanadianDividendInvesting.com if you want a newsletter. I forgot the word for a second. And join the conversation on X, CDI Newsletter @ on Twitter. If you want to follow my business and finance, I post all my raw numbers for my small businesses and all my stock investments and crypto investments on Drunk Dividends on Twitter. My personal stuff is Vote Willows, VOTEWILOWS on everything. You need some wine, shrugdot.com, SHRUGDOC.com. We ship everywhere in Canada. You need a stamp, mapleleafrubberstamp.ca. Need some engraving done, CammarkIndustries.com. I think that's everything.
Perfect. And just to clarify before we go, I'm not actually his dad.
What?
Is this a bad time to tell you?
I'm adopted?